Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at Tesla stock options analysis. So let's go over the data where the calls and the puts are sitting, and I'll provide you my opinion, what type of calls may come into fruition this week, what price action we have to see for calls or puts, both how they may work, what may go worthless, what may come in fruition, as I said, on calls on the put side. So let's take a look at all of that in this video from the lens of technicals. Now, I would highly suggest if you can go to my channel and check out this video that I did on Tesla on Friday, that is Tesla stock, this zone will decide it all. I am talking about the technicals in this video and what to look for potential price action going into this week. This will give you a head start into this options video, so please do so, all right? Now, coming back to the options here, well, so let's see what is the data telling us. So 235, I'm seeing huge calls sitting over there, and then I'm seeing there's some spike at $200 puts and then $180 puts. Just because there are spikes sitting at these price points doesn't mean that stock is or the price is going to go to these levels or the price points, right? It just means this is where traders are betting their money. And then we'll take a look at also the opportunities of what type of window we can get on Tesla this week, right? So now I would also like to mention none of this is any financial advice and it's only for education purposes. So let's start off with the calls first, the ones that we are seeing at 235. Are these the possibility or are they going to go worthless? So $235 calls is somewhere over here. Now I see this quite often that the spikes would be at the structural level changes, and I don't know why options traders go for these structural resistance or support type of calls or puts respectively, right? Because there's just you just going quite against the trend first of all, and then you're also wanting to structure break as well to make any money on this calls in $235 case. Why so? Because this is the zone that technically Tesla being in the downtrend, right? Even if this rebound continues, this is first of all against the trend, and even if this rebound continues, we have a structural resistance just from $234 area. So that's pretty much puts $235 calls in a very difficult position. So can this happen? Let's take a look at those possibilities, but definitely this is not the direction Tesla stock is in, and so you are fighting against, first of all, the directional tide, and also against the structure, because that's where the resistance is just sitting as well. But as I said, check out this video as well, guys, on my channel to know more about the technicals, as in just the technicals itself in this video that I have talked about. All right. So coming back over here, what are the possibilities? Yes, I'm not saying that it's not possible, but what Tesla would have to do to make this possible, $235 calls to be more significantly in that structure, right? So right now, overall structure, as I said, is on Tesla to the downside. The only way Tesla can go to the upside is if it doesn't break below 218 and 32 cents on Monday and it closes strong, either very close to 226 and above. If on Monday Tesla can do this, even if it closes strong up here, if Tesla can do that, this may start to look possibility. But remember, as I said, there's a resistance sitting at 233 to 234 zone. So you are really just gonna skim that surface here to make any money on this. So technically you would make a lot good money if it goes much higher, right? So likelihood of that happening is, it may happen, but we need to see by Monday 226 close, very close up here or above that. If we break to the downside on Monday below 218 and close lower here, it's then definitely not in your favor, and because the overall trend is to the downside and also intradays, then we are continuing downside as well, right? Then 235 is just not worth it. Now talking about the puts, all right, so I want to focus on 200 puts first and 180. Let's talk about 180 because well, let's talk about 200 first actually. So let me actually get rid of this one here. And let's go to the daily interval again, and let's go to $200. Let me put that line here. Right, so $200 puts, guys, are unlikely as well. We have first of all, this blue box you are seeing here from the last time, we got out of it, this became a support. But not just that, we have a 200 days and 50 days moving average. Again, anything can happen in the market, but the likelihood of that happening, $208 puts making money, is unlikely in my opinion, because uh, we, in my opinion, even if it continue to break to the downside, most likely Tesla at 200 days moving average will show price action reaction again to the upside. And at least this week, we'll see how this week closes, but at least for the this week expirations, because these puts and calls are for this week expiration, $200 puts are not worth it in my opinion trading. But again, as anything can happen, if the price action doesn't show any bounce at 200 days moving average, then this may break. But what I'm saying is that likelihood of that happening, of like bounce coming at 200 days moving average, is higher than not coming. So which would lead Tesla to stay above $200 and 200 days moving average, thus making those $200 puts worthless. Now, pretty much that sums it up for 180, right? 180, I'm not sure why traders are putting like puts at 180, what their logical reason is. I'm not quite sure, because it just doesn't make sense. Why so? Because 180 is just below all the structural supports. Like this is, I mean, I would say like this is negligible possibility of 180. Anything can happen. Remember that. But likelihood of this, I'll maybe give it like 2% likelihood, because there's just so much other structural support sitting and price action sitting that, yeah, it's just a little bit out of range for me to even digest $180 puts. So that's for where the spikes are sitting, right on the calls and the put side. Now, what is the more tradable range window between which calls and puts? Again, you will still have to trade with those technical levels based off of if those levels continue to stay in the intraday upside or overall stays bearish. Accordingly, those calls and puts will activate their likelihood on either side. But what's the window, right? So I would say the safer window to trade Tesla this week would be, guys, 234 almost, or 233 area, all the way down to 205 area, or 204 to 234. This is the range I would give Tesla this week. That is the safest range to trade in. And accordingly, as for the calls and the puts, you can make decisions as per the levels, and that is, as I provided you, that Tesla though is overall in the downtrend, but if it can stay above this 218 and 26 cents, upside may start to look good into that window. But if we lose 218, you have to be a little bit to the downside from where the price action is right now. And yeah, definitely, if we then intraday, some strength may continue. If we continue above 226, then the upside strength may continue. And if we lose this level 218 to the downside, then finally also losing 214 will give it $205 range. At least that's a possibility. And then I expect this thing to remain choppy here as well. Anyways, that's it for this video. And as I said, check out that video of mine that I did on technicals for Tesla over Friday, and that will tell you everything on the technicals lens as well. The video is right over here on my channel. All right, now guys, so as I said, this is all for this video. If you found it helpful, valuable, hit the like, subscribe. I'll see you in my next videos. Take care. Bye.